Hello everyone, Ron Harrison here to talk about index plans, our economy, and the stock market. So I'm not a stock market advisor. In fact, I refuse to get my securities license because I do not want to put people's money at risk. And isn't it interesting that the word security means a stock, bond, those sorts of things. Generally, it means stocks. But are stocks secure? No. We've learned over the last 5 months that stocks are not secure at all, right? Markets lost 12, 16, 20%, depending on which stock market you're in. But hopefully, your fee-based manager is making trades for you that are helping you avoid those huge losses. But the thing about that, of course, is they make fees off of every sale that they make and when they use your money to buy something else. Typically, they make fees. But anyway, let's get away from that. So here we are, um, starting June 2022, and we've seen the stock market crash. We've seen gas prices going through the roof. We've seen annualized inflation of, the government puts out 7%. It is much higher than 7% if you think about all of inflation. I mean, the numbers that they use are protected by certain types of prices and allocations they do. The real cost of inflation, if you look back over maybe the last 5 years, the average amount of money you spent from January through May of every one of those years and average it together, and then you look at what you spent this January through May, I guarantee that you're going to be 25% higher than what you spent. Conceivably, not everyone, but I'm just talking, when we talk about consumer goods, groceries, gasoline, those sorts of things. But anyway, let's get off of that bandwagon. So the whole idea of what we do with index plans is that index plans protect you from the volatility of the stock market. You don't have any issues with stock market volatility because index plans go up when the market does well. They lock in every year when you've earned your credits, they lock in. And if the market drops 20%, you stay level. None of my clients have even called me except to say, Ron, I'm really glad I have one of these plans. You know who's getting all the phone calls? The Fidelity guy, the Schwab person, the Wells Fargo people, right? They're getting phone calls. Hey, where's my money? What's going on with my money? But we rarely get any phone calls like that. We never get any phone calls like that, actually. But anyway, when we talk about index plans, 3 ways we do index plans. And if you're clients of ours, current clients, or looking to be clients, you have probably one of these 3 plans. So the first one is monthly contribution. So I have people that are doing like $50 a month, like for grandchildren, for $1 million baby plans or college index savings accounts. Those are indexed. They go up, the market goes up, they lock in. So we have lots of those things going on. So that's monthly contribution. I have one client that does $1,500 a month because he wants to retire early. He's a business owner, but we have people, just regular people can do these things too. I have people talk to me all the time, Ron, how can I get out of taxes? And that's a cool thing because those people are in tax-free index plans, never ever pay taxes. And do you think taxes will be higher later on? Yeah, they're going to be higher 2, 3, 5, 7, 10 years from now because you know what the government has to do? All the debt they're piling up right now, we're at about 14 to 20 trillion dollars in real debt. But the government doesn't publish those numbers, but real debt. And the only way they can pay debt or to stay level is by taking more money out of your pocket, and that is taxes. So I recommend to my clients get out of taxes as soon as possible. And you can do that with tax-free indexed accounts. That's one indexed account. Another indexed account we have is when people have 401k, IRA, inheritance, or even cash rollovers. Recently worked with somebody who had about $120,000 that they had saved up. And they said, it's just sitting in a savings account, making that much money, and I pay tax on it every year. What can you do? So we put them in an index plan, and the index plan that we have put them in is one that goes up when the market does well, locks in when the market's bad, up sideways, up sideways. And the cool thing about that right now is that when I did that plan for them, the market had dropped so much, right? So they were buying low on the stock market. That's the neat thing about the stock market being as low as it is right now. Clients coming in with me, they're locking in at that low amount. Warren Buffett, one of the best investors of all time, buy low, sell high, right? Well, that's what index accounts do. You start them now in June, you're going to be getting in at the lowest possible rate that we're probably ever going to see with the market. I hope it doesn't drop anymore, but we never know. But anyway, you're getting in low. So that's another type of index plan, up sideways, like an investment. The third type of index plan we have are the rollovers I do for people, the big lump sum rollovers, and those index plans for people that want to know exactly the penny they'll have 3, 5, 7, 10 years from now. That plan goes just like this. It never even goes sideways. So that plan is like this. So some of my clients have 6%, some are 6.5, some are 7.2. Some recent clients got 7.2. So every year they're 7.2. 10 years from now, if they start with 200,000, 10 years from now they'll be absolutely guaranteed to have $400,000. 5 years from now, their 200,000 will have turned to 300,000, absolutely guaranteed. So I'm all about security, safety, guaranteed money, guaranteed security of your money. So hit me up if you want to learn a little bit more about the index plans we do. Happy to sit with you face to face, in our office, via Zoom, or do a video for you, a phone call, whatever it happens to be. But just get a hold of me if you are sick and tired of losing money with your investment accounts and with your 401ks, IRAs, and inherited plans. Thank you and have a fantastic summer.